Hey everyone, welcome to The Explainer. If you've been watching the markets lately, you already know there's a massive headline totally dominating the IT sector right now. Okay, let's dive right into this. Wipro shares have just been on an absolute tear, literally rallying over 11% and hitting 9 consecutive sessions of gains as of May 26th, 2026. And the rocket fuel behind all this momentum? It's their massive 15,000 crore rupee share buyback. So today, we're going to break down the exact mechanics, the crucial dates, and those brand new eligibility rules you absolutely need to understand to navigate this event effectively. Here's our roadmap for this explainer. We'll be looking at the Wipro buyback opportunity, the key dates and mechanics, small shareholder eligibility rules, how the acceptance ratio works, the new 2026 tax reality, and we'll wrap it all up with your final investor takeaways. Let's get to it. First step, Section 1, the Wipro buyback opportunity, grasping the 60 crore share offer. All right, the headline number you really need to lock in on here is 250 rupees. Wipro is basically offering to buy back up to 60 crore fully paid up equity shares at exactly this price. Now, to put that into perspective, that size represents roughly 5.7% of the company's total paid up equity capital. But here's the real kicker. What makes that 250 rupee price tag so incredibly compelling is the premium. Wipro's stock has recently just been hovering in the 203 to 209 rupee trading range. So the company is offering a very juicy 20 to 23% premium over those recent trading prices. It's super easy to see why investors have been scooping up the stock, right? Moving right along to Section 2, key dates and mechanics, navigating the tender offer route. Seriously, you'll want to mark your calendars right now for this one, June 5th, 2026. This is the official record date Wipro has fixed. Now, to actually be eligible to participate in this buyback, which is happening through the tender offer route, your name absolutely has to be on the company's register by this exact day. And remember, the market operates on a T+1 settlement cycle. That means you literally cannot wait until the record date to buy. You've got to buy the stock at least one business day prior to June 5th to make sure it settles in time. You need those Wipro shares safely sitting in your demat account before this date. Then, once the tender window finally opens up, you'll officially tender your shares through your broker's platform. Section 3 is all about small shareholder eligibility rules, claiming your spot in the retail quota. Okay, so how do average investors strategically get in on this? Well, there's a highly specific mathematical threshold to actually qualify as a retail investor here. To officially get classified as a small shareholder, the total market value of your Wipro holdings in your demat account absolutely cannot exceed 2 lakh rupees on that record date. And here's a pro tip. This valuation is typically calculated based on the buyback price itself. So you've really got to keep a close eye on your share count to make sure you don't accidentally spill over that 2 lakh threshold, especially if your whole strategy is to stay snug within that retail category. So why exactly do you want to be in that retail category? Well, check this out. Wipro has specifically carved out and reserved 15% of the entire 60 crore share buyback exclusively for these small shareholders. Because let's face it, everyday retail investors make up a much smaller portion of the total equity compared to those massive institutional funds. Fighting for this dedicated 15% slice usually gives you a really distinct statistical advantage when it finally comes time for the company to actually purchase the shares. All right, time for Section 4, the acceptance ratio explained, the reality check of tendering shares. Now, this brings us to the absolute most common question we see from investors. Hey, if I hold the shares on the record date and tender them, is Wipro going to buy every single share I offer at 250 rupees? Well, the short answer is probably not. Simply offering or tendering your shares absolutely does not guarantee the company will accept all of them. And the main reason for this is something called the acceptance ratio. Look, if everyone wants to sell their shares back to Wipro at this amazing premium price, the buyback is going to be oversubscribed. When that happens, the company just accepts shares on a proportionate basis. Let's say you tender 100 shares through your broker. If the demand is just off the charts, the mathematical acceptance ratio might dictate that the company only actually buys 40 of your shares at that 250 rupee price. The remaining 60 shares, they're simply returned right back to your demat account, leaving you exposed to the normal market price again. You absolutely must factor this variable in before making any investment decision. Which leads us perfectly into Section 5, the new 2026 tax reality, calculating your true post-tax profit. Let's see how these updated rules create a totally different playing field for investors today. Historically, the old tax rules were, quite frankly, a massive perk. Buyback proceeds were completely tax-free for the investor because the company footed the tax bill. But fast forward to April 1st, 2026, and the rules of the game have completely changed. The tax burden has officially shifted directly onto you, the recipient. Buyback profits are now treated straight up as capital gains. So if you've held these Wipro shares for over a year, you are now looking at a 12.5% tax on those gains. This means that 250 rupee headline price isn't exactly what goes straight into your pocket. You really have to calculate your true post-tax profit to decide if playing this buyback arbitrage is actually worth your time and capital. And finally, Section 6, Final Investor Takeaways, simplifying your next steps. So, to bring it all together, the crucial takeaways really boil down to these four main pillars in incredibly simple terms. First, the deadline. Your shares must be settled in your DMAT account by the June 5th, 2026 record date. Second, the reward. Wipro is paying a sweet premium of 250 rupees per accepted share. Third, the strategy. Keeping your holdings under 2 lakh rupees safely classifies you as a small retail investor, which unlocks that dedicated 15% quota. And fourth, the reality check. Remember, you definitely have to pay capital gains tax on your profits under the new 2026 rules. And of course, please remember, this explainer is strictly for educational purposes, and you should always consult your financial advisor before making any big market moves. I want to leave you with this final thought to evaluate for yourself. Once you actually run the math on your specific tax bracket and estimate a realistic acceptance ratio, does tendering your shares into this 250 rupee buyback genuinely fit into your long-term investment plan, or does it